In this video, I am going to talk to you about probably one of the best strategies that you will be able to find. This strategy works for any type of financial asset, in any time frame. For the video example, we're going to test it on Ethereum in the 5-minute time frame. What we will have to do in the first place is to select an SMA or MA simple moving average. We will configure it for 200 periods. But we will put it on a higher level chart, such as the 30-minute one. This will make it possible to see it on the 5-minute chart, but take the average values of the 30-minute chart. Then we will set the thickness to maximum and the color to green. This moving average will be the one that acts as a filter. That is, if the price is above the moving average, we will only carry out purchase operations. If the price is below the moving average, we will only carry out sell operations. The next thing we will do is select the RSI indicator. We will deactivate the average, and we will change these values to 68 and 32. Ready? We have everything configured. Now let's make an example of a buy operation. The first thing we have to do is identify the price above the moving average. Once we have identified it, we will have to wait for the RSI to touch the value of 32. In case it touches the value of 32, we will plot the Fibonacci levels from the beginning of the trend to the highest point of the trend. If the level of 32 of the RSI coincides with any of the Fibonacci levels, then we will carry out the buy operation. In case the price is close to the moving average, we will place the stop loss below it, and the take profit in a risk-benefit ratio of 2:1. That is, twice our stop loss. In case the price is far from the moving average, we will place our stop loss below the next Fibonacci level, also with a risk-benefit ratio of 2:1. Let's look at an example of a sell operation. The first thing you will do is wait for the price to be below the moving average. In case it does, we will wait for the RSI to touch 68. If it does, we will plot the Fibonacci levels from the beginning of the trend to the low point and see if any of the levels coincide with the 68 of the RSI. In this case, no Fibonacci level coincides with the price at 68 of the RSI, so we do not execute the operation. In case they match, we will carry out the sale operation. Just like before. If the price is close to the moving average, we will place the stop loss above it and the take profit at a risk-benefit ratio of 2:1. If the price is far from the moving average, we will place the stop loss at the next level Fibonacci, also with a risk-benefit ratio of 2:1. Some considerations to take into account when applying this strategy would be: do not trade when the moving average is flattened, as it could be in this case, as it could give us many false entries. It is convenient that at the moment of carrying out the operation of buying or selling, we have an engulfing candle. That is in the following way. Since this will generate much more confidence in us, and we will have greater opportunities to hit that trade. And ready! I hope this strategy has been useful to you. Do not forget that before trying it with real money, you need to try it in a demo account so that you can put it into practice by yourself. Do not forget to subscribe. so as not to miss any strategy, as we upload the best strategies every week.